What is good, everyone? Had to switch the music real quick because I realized of like, oh shit, I'm publicly live streaming right now, so I gotta be copyright free. Hope all of you guys are doing good. Hope all of you guys are having an amazing Monday. Personally, my third live stream of the day. Whether you have seen me in the private live streams or are seeing me for the first time right now in the public stream. But the moment I press go live, we are seeing a move down. Mic chopping. Mic should be good. But I'm just checking the chat real quick. Let me know if everything is all good. Mic is good. Mic is good. I think it's just you. It's the same settings as we've had today, the entire day. We're gonna go over some nice crypto charts. Want to talk a bit about Forex as well and some things I am watching. Kind of recap what I tried to explain in the Bitcoin update video as well that I posted yesterday or today. I'm kind of having a losing my track of time, but we're just gonna jump straight into it. The people that jump in later, they will soon jump in as well, and then can rewatch it back if they want to. So, market makers are tuning in. Yes, sir. Yes, sir. Let me get rid of this low time frame TA and talk about Bitcoin. Obviously, like, we had this 3-day range here, right? It's very simple. We had this 3-day range, and then the moment I decided to leave the charts, we broke down from that range, and we had a very aggressive breakdown. Now, when you have a range and you don't have a valid distribution model at the highs, and you actually break down, it is the possibility that that can actually be more bullish than bearish on the high time frame, because now price can sweep the sell side liquidity that was located at around 85.2 and then get a potential reversal back up, since you don't really have a proper distribution model at the highs. That doesn't mean that price, without having a proper distribution model, like a technically valid distribution model, doesn't mean that you can't go way lower. Like we have seen it on Pepe, where at the current all-time high on Pepe, we had something very similar, right? We had our range high, and we got that deviation 1 right there of this range. Obviously, many factors came into play here, where you also deviated your all-time high, so it was the first range in all-time high territorium, and then you did have a Model 1 distribution as your second tap itself. But overall, I remember us watching for a sweep of these highs right here, for then that extreme liquidity grab to then dump down and take the Model 2 distribution short, which we never got. And obviously, from there, price had a very aggressive move down over 70% right now. So it doesn't mean that you can't go way lower, because you have to realize, and I've said this so many times, but prior to coming into this mid to high time frame range on the 3-day, you had your own little lower time frame range compared to the range I currently have on the chart, where each tap had its own manipulation play and its own distribution model. So just because you have a 2-tap formation on the 3-day range, that doesn't take away from the fact that prior to entering the 3-day range, you had your own range that also had lots of manipulation above, meaning that there was enough opportunity for the market makers to sell their positions to dump price down significantly. Okay? Now, price came down, and I saw some people post a potential PO3, and technically speaking, yes, it can be a PO3, but the issue was what happened after the second candle on the 3-day opened and behaved. Because when you have an aggressive push down, I actually want you guys to think immediately about a PO3. Instead of becoming fearful, I want you to realize that, hey, we have a range. We had some sort of a compression effect with sell side liquidity below and buy side liquidity above. We have that aggressive displacement candle sweeping the 85.2K liquidity that we were watching. If you get your confirmations in the manipulation phase, it can be a PO3. The problem is, the moment you close this candle and you open this candle, you went even lower. And now your manipulation phase is just too big and it doesn't meet the requirements that a typical manipulation phase should have if it wants to be a high probability one. And all those requirements have been explained in lecture 9 or 8 of the TCT mentorship that you can find on this same channel. Okay, so the PO3 idea was gone. It could still be a range deviation that reverses, but I just wouldn't call it a PO3. Now, what happened is that price made lower highs and lower lows, and despite us leaving behind buy-side liquidity and making a plan where we were looking for a higher low for a move up to buy-side liquidity to then potentially go lower, that was the initial planning. We didn't get that retest for potential entry, but we did get to squeeze up the buy-side. But something incredibly interesting happened, and that was that the squeeze up was caused by the announcement of the strategic reserve from your big friend Trump. And obviously we were watching this resistance POI for a long time. Right now I only have the refine zone on the chart, but it was a refine zone in this bigger zone that was also in confluence with your volume profile. Okay, where you can see here that the supply zone itself, which is technically speaking also a market maker order block because it's the buy to sell that created this Model 1 distribution right here. Price came into that with the news of a strategic reserve. Now, looking at the chart objectively, technically speaking, two things can happen. You had no high time frame closes below the DL2, making it still a potential valid deviation. But from a 3-day market structure perspective, and you guys should know if you have watched lecture 1 of the TCT mentorship, you should know how important 3-day market structure was in the previous cycle. You could have traded this entire cycle with 3-day structure alone, and the 3-day breakup structure is very significant. And you have a good breakup structure because you have a candle close below with good displacement, and then you have a candle that's spent below prior to retracing. So from a market structure standpoint, it was a breakup structure right here. From a range standpoint, it was still a valid deviation. What do? You track your market structure from low to high, and if that breaks back to bearish, that means that you're going to get the lower high for the lower low back down. If that doesn't break back to bearish, well then there is simply no lower high for a lower low, and you're going to get your reversal back up following the range deviation. So that's all that we were watching today, and we were not just watching the breakup structure. Obviously, we were watching the TCT model creation coming into the level, which we did not get on Bitcoin, right? We didn't get it on Bitcoin prior to getting the retrace right now. But what's so interesting is that I don't mind, just like I did, where you pre-plan 2 scenarios and you just check for the confirmations and you react to what the market gives you. But the people bull posting about this being a weekly SFP, it doesn't make any sense. Why would it matter if this is a weekly SFP when it's not even weekly market structure? There's genuinely no weekly market structure. The range is not valid on the weekly. It's a 3-day range. So the SFP has nothing to do with what the market is supposed to be doing. Yes, you have an SFP of a low, which is not even a valid low on that same time frame. So I'm starting to believe that the whole SFP narrative is just slowly becoming a new narrative for whales to keep hopium on the chart when they're simply delivering a retest, where it's a retest into key resistance on the news about the strategic reserve. I'm telling you, if you were here in the bear market or you were here in early bull market and you were to hear that a strategic reserve around Bitcoin and Cardano and XRP and SOL and ETH will be announced, you in your right mind would say that those are amazing exit triggers and amazing macro global news events for exit liquidity. But then now when it happens, there's all of a sudden hopium. I don't understand. Like, my expectation was a rejection, right? Now, I'm going to trade the confirmation, but the expectation was a rejection. So I don't understand why I got so many posts on my timeline about people talking about the SFP when the SFP is literally useless. Like, honestly, it's useless. It's not even a weekly range, bro. You know? But, yeah, we came up, swept a lot of buy-side liquidity, rejected from the most refined level right there. And, yeah, the entire day, not that much has happened because we never took that initial high right here. This was the high we put in. Never took that initial high. And we kind of saw low, lower high, lower low. And then we had a slow grind up, leaving lots of liquidity below. New York open, push down, and we just had a continuation down, to be honest. Ever since the news event on Sunday, we just had lower highs and lower lows coming down. We're right now trying to leave that original range value again, which is not ideal if you want a continuation towards the upside. Okay, if you want to have a continuation towards the upside, typically when you have such an aggressive V-shaped recovery back inside, yes, obviously you can reject from key resistance. Like, you can't have a vertical move forever. You need to cool off. But for a bullish continuation, price doesn't typically pull back to the 0.5, which is what you're currently doing. And especially, you don't go outside of the original range low right here. Like, you wanna keep this level as support, get a pullback to like the 382, just a pullback where it's nothing but inefficiency, leaving people behind, hoping that you're gonna get a bigger pullback, and then you just continue to squeeze higher. So what I'm currently seeing is just a rejection, to be honest, right? It's just a rejection. And I'm just sidelined, waiting for the next high probability model to present itself. But I wouldn't be surprised if we can just go lower and come towards this 73-ish area for a lower high, for a lower low, and start a new range, right? Simply start a new range. And from there, many different opportunities can present themselves where, you know, overall on the swing structure time frame, like we just said, this is not valid weekly structure. You could say that this is still in the uptrend, and you could still make a higher low for a higher high and manipulate from there. I would actually really like that idea. That's one of the ideas I'm watching as well. But I'm not going to dive into that because I explained that very in-depth inside the Bitcoin update video. But today was basically just watching, are we going to get a rejection? Are we going to get a distribution model, or are we going to get a reaccumulation model? Now, we're coming into very important support right here, which is a demand that got left behind on the sell to buy when the news got released. But, yeah, bro, I don't know what's up with that Trump family, bro, but what they have been doing around crypto, I'm like, I just don't understand it. I just don't understand it. I truly don't care. First, like, I truly don't care, but like, I'm like, is that really what's going on? You know, is that really what's going on? So below this demand itself, you have nothing but liquidity, and then from there is not that much that can hold price up, to be honest, guys. There's not even an order block, just a pivot point block. So you have to ask yourself, what's most important is that you ask yourself of, did you get bullish in here? Did you get bullish in there, or did you realize that it could be a massive trap where they pull price back into key resistance, and the pullback was caused by a strategic reserve announcement? Okay, as long as you can stay true to yourself and realize that you were looking at a chart objectively, not jumping into any spot positions because maybe we go to new all-time highs, and then maybe your hopium of the 20x alt season comes back. but only you can tell that. Now, I've been loving the USDT dominance chart, right? That has been even chiller to trade than Bitcoin itself, in my honest opinion. And we got a pretty big sell-off from there after sweeping the liquidity right above that supply, therefore also grabbing the liquidity from the block itself. I would still love, and it's a bit contradicting right now to the Bitcoin price action, but from a high time frame standpoint, I would just love it if you can get like a slow move down from here. Something like this. Not create too much supply and do something like that. Now, it doesn't need to happen, but it would be a very easy play for us if it does, okay? But what this would basically mean is that most likely Bitcoin would have to make a new all-time high, right? And you should start seeing a higher low for a higher high to go higher, which I'm not really expecting when I'm looking at the Bitcoin chart. But if you do, this could make a lower high for a lower low. And the way this is behaving, I have seen this so many times. Technically speaking, you have a 1, you have a 2, and you have a 3. But the 3 is way too close. And the 3 wasn't good to trade based on all the resistance levels that you had in here. And then what price tends to do is from that low time frame 3, you move back up, test the supply, see how strong it is, pull price back, realizing you have the quote-unquote ammunition to reverse price significantly, and then either create a higher time frame model 2 accumulation, where your third tap on the low time frame disappears if you zoom out and you create a new third tap, or obviously a model 1. Where I'm leaning more towards the model 1 because I don't particularly like the POIs that much for a third tap in here. And you have you have multiple amazing POIs below the current range low that price can tap into for the third tap. If something like this happens, guys, I'm going to invert it because then you're going to see it from a distribution perspective, which just makes things better. If something like this happens, it is the easiest exit trigger that you will get. Honestly, I don't care what Bitcoin does. I don't care if Bitcoin has a distribution or not. When you see something like this and it confirms, that's game over. Okay, that you're gonna get a rotation back up to here, and then probably fill an inefficiency in here and reject from something around 7.3-ish, something in here, right? But that's just that could just be picture perfect. Now, don't marry the idea. It's just the easiest playbook. If they give it, it's amazing. If not, that's also completely fine. But from a high time frame perspective, we have some supply above right here, your daily order block, which is also a significant block. And besides that, not that much up until the range high. And this is a very clear range. Below, you don't have that much. You have some lower time frame demand zones. You have a demand zone right there. And then there is some demand in here, but it's not that significant. So I would rather just want to sweep all the lows. Meaning, if you get a sign of a distribution in here, right, in this area, then you could be putting in a lower high for a lower low, right? If you follow your structure coming into that resistance POI, you're making higher lows and higher highs, and you break your market structure back to bearish. Right here, bearish break of structure, which is obviously a very significant break of structure. Came into refined demand, swept a lot of sell side liquidity, and is now pulling back. This is the most obvious resistance POI where price can reject from, which is actually part of this little demand to supply flip. Truly showcasing the fact that that's where supply took over and broke structure. Also not really having any order blocks, like single order blocks above higher. So in my opinion, if you're going to put in a lower high for a lower low, this will be the place to do it, which is equal to the higher low for the higher high right there on Bitcoin. You're only going to get the lower high for the lower low if you can break your level 2 market structure. What's your level 2 market structure? The market structure from the low up into that retest POI high. Okay, so right here, you can see on a low time frame, you kind of have a low, a high, a higher low, and a straight shot up. So there's not that much to look for. There's not that much to look for. On a lower time frame, you can dissect it even more, right? You can dissect that last red leg and the last expansion even more in 15-minute structure right here. But that's kind of it. And if you notice something interesting about this uptrend, it's that it's leaving behind demand. So I can already see on the lower time frames right here, you have structure demand. This entire structure pool leaves behind an inefficiency, also becomes structure demand. When you are moving up with inefficiencies and you're leaving behind demand zones, that is a good move up. Okay, that is a good move up. This is a strong move up. This is not giving me signals that it should go back down immediately, because you're moving up in a structured fashion where you're leaving behind demand. So you're leaving behind support. If you go up slowly and you're leaving a liquidity trail below, that is actually when you can expect a reversal back down, because you're giving price a reason to come back down, to sweep all that liquidity that you leave behind on the move up. That's not really the case right here, right? That's not really the case right here. So we're going to watch the POI. We're going to watch for distribution models in there, but it's kind of giving me the same vibe as Bitcoin, where it's like I'm not particularly expecting anything. I would also need to see a lot if I want to pull a trigger on something, because we're just going up in one straight fashion, which is obviously not good for your shorting ideas on the USDT dominance chart, and therefore long ideas on the Bitcoin chart. It's truly just a beautiful retest. And when I'm going to look at other pairs as well, it just adds to the fact, it just literally adds to the thesis of rejecting. And that's what I was talking about this morning. Like, if I just look at ETH, it's so clean. It's so clean. Like, look at this behavior. Like, you get a pump up. Let me delete these lower time frame POIs. Like, you come down, right? You had that beautiful Model 1 distribution. Like, that Asia market maker did not want us to make a fucking back, bro. That Model 1 distribution with that refined entry, oh, Lord. They did not want us to make a back. But you can see the aggressive expansion down here. You can see the pullback. And then from that pullback, that's kind of when your return to zone starts. You go down in a more structured, slow fashion, leaving reasons to go back up again. Now, obviously, you can draw your range on ETH from low to high, but where is the proper range, right? Even though this is technically a valid range and you also deviate your low right here, this is the compact range. Like, if you draw a volume profile, you'll see that the range is up there. All the volume is in there. You can see right here, look at the volume spikes. That's a nice concentrated range. This is just nothingness. And then what price ends up doing is on the news event, again, strategic reserve. You push up into resistance with the volume area low and your buy side liquidity target. You distribute on a lower time frame and you reverse it back down. I'm telling you guys, if you were awake, such a beautiful distribution model in there on the low time frame. Look at that liquidity curve as well. It's just beautiful. Absolutely beautiful. And then you break down from your distribution, and then you go over into your redistribution, where you get your 1, you get your 2, and you get your 3. That was technically speaking not a valid third tap. Should have gone up a bit higher. And then you have your beautiful liquidity trail. Before people start asking, yes, the technical target of the Wyckoff is right here. Okay, but it's gonna go to there because it's just one big liquidity trail. And then you had your continuation down. And here you can see the big difference, right? Remember when I was just talking about the USDT dominance and the way it came back up here, leaving behind demand, leaving behind fair value gaps, validating the demand zones? Look at the difference. Look at this retracement. Look at this move back up on Ethereum from this low to that high. You see the difference? You see the difference in that move up from this low to that high compared to this low and that high? This creates a picture perfect liquidity trail. There is no support, zero support on the move up. It's just waiting to flush back down again. Whereas these aggressive candles here, these are not short positions getting opened. These are stop losses getting triggered from longs that cause a sell order in the market. Your beautiful liquidity trail as explained in lecture 4. So, ETH was the better play if you wanted to actually short the markets. But again, what's that timing? It's during your exact Monday open going into your Asia. So I wasn't awake for it. But that was just beautiful, right? That was just beautiful. And the same situations you had on SOL. Like, bro, we played SOL so clean. Like, it was played so clean. We were watching for that relief rally all this time. Let me see if I can find our initial planning here. Oh, look at this. Look at this, guys. Oh, it's way too large. Okay, let me do it like this. Look at this. Oh, look at this pre-planning. Look at this pre-planning. You cannot tell me that this is just not picture perfect. We were watching this right here. Look at that. 1, 2, and we didn't even know this 3 was there. Like that, we were pre-planning the 3. Get the long, and you guys know how you could have traded the long. Okay. Target to these highs, which were these highs right here on the left. And then take it into a short. Take it into a short if present. Now, obviously, there's one massive squeeze up. And then you have to look for shorts up there, mitigating even more the refine level. I'm just placing the short for the idea, but not that there was a short down there. And then reverse it back down. Like, you cannot tell me that this is like, this is clean, bro. That's clean. I drew something like this. Unfortunately, I wasn't online for that third tab right there and how you could have managed it in the best way possible. And up here, we got that massive pump. There wasn't really a distribution model. Like, if there was something you needed to trade in this low time frame model, which is also not the best, not the highest probability to trade, but maybe worth a shot, not gonna go too in-depth about it. Short was just less nice. But now you're in a situation where you have a decisional order block, right? It's like, are you going to make a higher low for a higher high based on this 8-hour market structure pool that broke back the bullish? Or are you going to continue with your 18-hour higher time frame structure that's making lower highs and lower lows, and this was just a relief push up? Now, my thesis is going into the 18-hour lower high for the lower low, given the fact that we are in this macro distribution model where the high time frame order flow objective of this model 1 is to come to the range low. Which is still crazy to think about that I missed my fucking entry, bro. I missed my entry up there. Oh, Lord. What a pre-planning that was. Who remembers? Who remembers me making a 20-minute video in the Discord? Who remembers me making that 20-minute video in the Discord talking about this when we were up here? Low-key, I was so like confused because like it was like my mind telling me like objectively it was like this is a crazy distribution model, and then I was like, are we really? Is this really gonna play out? Like, is it really gonna play out? Looking like it's gonna play out, which is absolutely crazy. But you gotta just go on the lower time frames and identify these pairs and watch what it does. Pepe also really not looking good. I took my final take profits at that range low right here, which was amazing. But the way we came into the supply, rejected, went lower, and you're seeing all this sell side liquidity. Like, why would price not come to this 0.058 low? Also, XRP, beautiful pump up, sweep all that buy side liquidity. It was announced in the strategic reserve. It's a beautiful opportunity to just sell, right? You have some breakers down there, but overall, I'll be more focused on the distribution model if it presents itself. We didn't really get one, though, unfortunately. Didn't really get a proper model. Same for ADA. STX coming to it as well. And this was from the old post. Yeah. It's crazy. I want to quickly check what Bitcoin dominance is doing. Because this setup has been on that chart for a minute. What has been going on here? It's still a bit sketchy, don't get me wrong, though. It's still a bit sketchy. What I hoped for was a move down in demand and that slow grind up, giving us reasons to come back down again, to then have like a kind of cracked Model 2 distribution schematic. But what we're doing right here is not the best behavior for that, because you're sweeping the low, you're leaving the demand still intact, and then you're coming up. Creating demand on the move up again, leaving demand behind. No sell side liquidity creation. Making you be careful, making you want to be careful at least. And that was a 1 hour block. Let me quickly check. Oh yeah, 1 hour block. Let me at least send an alert there just to be aware of what happens. But as of now, it doesn't look the best. Let me check the chat real quick. Insider trading that they are doing. Oh, for sure. Like, I think you guys also saw, right, that you had this, someone opened up this like 20,000 ETH or like 200 million position long right before the strategic reserve got announced. Like, who the fuck can that be? Huh? Like, think. Brent, let's say we get higher prices in May. Okay? That would mean we get new lows on Bitcoin. So I'm thinking you're referring... Oh, and that mean we get new lows in Bitcoin and grab that supply higher on USDT dominance. Let's say we get higher prices in May. That means we get new lows on Bitcoin. And grab that supply higher on USDT dominance. Yeah, well, it could be that maybe if we can come to this lower region and just start a new range, right? You would need a new range. It's a very aggressive move. You would need a new range if you want to go back up. Which kind of makes this less good, because if you go up all the way to this supply, right? If you go up all the way to this supply and it starts ranging in here, and it's taking its time to go back to make it a high probability pullback, it's like, as you don't want tap 2 and tap 3 to become too extended. So I would need to see how that develops then, because it would need to be like preferably like something like this, right? But you don't want to come down too fast. You want to create liquidity. But you definitely need a new range. That's why I gave you guys my... Either way, I don't care what Bitcoin does, right? And you shouldn't care either. Like, if you care, it means you're hoping on your investment portfolio to perform well. But in the server, we're just focused on compounding weekly profits, right? And using that compounding journey to reach financial freedom. So no, despite what Bitcoin does, I don't care if Bitcoin dumps, right? Your spot on Bitcoin should have definitely been sold here. For the people that don't understand, with spot, it's different. I traded through 3 different portfolios: investment, spot, and then leverage trading. Leverage trading is active, buying and selling, compounding weekly profits, etc. Spot is buying low, selling high. And then my investment consistently as well from a swing perspective. And then investment is more like bear market investments, sell at the top when you think it's the top, you know, kind of in that euphoria state. So the profits on spot should have already covered any losses you take on investment if you want to take your investment still, right? And keep stay in the game for that. So I really don't care what happens in the crypto market. So if Bitcoin dumps, it's like, well, was there a setup? Oh, Bitcoin dumps 20%. Okay, what's the RR? Where's the entry? I'm just looking to trade it, right? I'm looking to trade it, and that's it. So I don't really care what Bitcoin does, to be honest, because especially if you have Bitcoin here, I've said it multiple times, if you hold Bitcoin spot, which most people don't, then that you should have sold in that range for sure, and that was your retest. Okay, the RR is not worth it to hold it. Now, from a high time frame standpoint, as the last time I'm gonna say this, what I would personally love is if you come down here, okay, you come down here and you just start a new range, okay? Now, this is not going to be time drawn, but just price action drawn. You reject here, you come down, okay? You create some sort of a nice new range, a new base, where price has a nice accumulation model. And you reverse it back up in here, boom, okay? Make a new all-time high. From there, you had this range right here that created this 3-day range that broke down and created the bigger range. If you've watched the lectures regarding ranges, it wasn't in the range lecture. I think it was in the lecture 6 of the advanced TCT models. You know how low time frame ranges can go over into mid time frame ranges, can go over into high time frame ranges, and then from here distribute, come back down, and do something like that. You know? That would be my ideal play. I would love that. I would absolutely love that. Again, doesn't mean it needs to happen. It's just what would be just picture perfect for me, okay? From a TA standpoint, it would just be perfection. It will be ultimate market maker involvement, setting itself up for that massive range that can dump price lower. Now, what would be insane if, let's say this were to happen, what I would want to see in this darker highlighted area is on that second push up, I would love to see Ethereum outperforming Bitcoin, and I would love to see altcoins lift off the ground. It's not going to be your 20 to 50x that other people promise, but that would be an outperformance with ETH BTC going up, Bitcoin dominance coming down, and then altcoins lifting off the ground with the total 3 also deeper in price discovery. To kind of get that euphoria back of people thinking this was just the biggest shakeout that we have ever seen. And then now we're just going to go back to the old routine of expecting a 50x. And we just massively distribute and we go lower. My ideal scenario, okay? Ideal scenario. Doesn't mean it needs to happen. It's just what I would love. So that's also what I would be watching for if we come into these support levels, okay? But we're going to trade the confirmations and not the expectations. If price was going to reverse from here, I would watch for something similar, but then it would take longer, or it could be different. So it could be something like a move up here, distribute, right, and then go lower, and then create a bigger range in here or something, right? But that would be this would be my preferred play. Go down, come back up, confirm the higher time frame range, distribute, because at this point in time you are long past your weekly, like you have good weekly structure, right? This is a good pullback. So if you can get something like that, you can disregard this range because that's not valid on the weekly, because you don't have the valid 6 candle rule in between the range high and the range low, invalidating the range on that specific time frame, and then boom, get that pullback, go higher. This becomes the new range pool and trade that range. It would be perfection. I have said that the moment we entered this range in here. Literally, the moment we entered this range, I was like, what if this tap can already be the start of something bigger? which at the moment it is doing that, right? It is doing that. So we're gonna see. We're gonna trade level to level and see what the market makers have in store for us. But overall, it's just very important for you as a trader to realize what were your emotions during this most recent pump. Okay, did you get FOMO? Did you jump into spot positions because you thought that this is going to be it? This is the ultimate PO3 because that's what you saw on your timeline? Or did you realize that you're coming into key resistance? You prepared 2 scenarios and you wait for your confirmations and you did not make any rush decisions. Because if you want to be a profitable trader, you need to change the way you think. Okay, you need to change the way you think about trading and adopt the mindset of a profitable trader. STX alert just went off. Yeah, that's coming down. But it's coming down a bit fast, right? It's coming down a bit fast. So wait for your market structure. But you got to trade it in confluence with the majors. Like, this is not going to play out if Bitcoin is not in line with it. Mr. CK19, can you explain what the distribution model is? Brother, I have an entire mentorship on the same channel that you're currently watching on. So just go to the playlist section and start watching the TCT mentorship. Crypto Comrade, Lars, a question. I was about to take a short on SOL on the supply. There was a model 1, but it was a sort of an inside range. I think I know which one you're talking about. There was a model 1, but it was sort of an inside range, which basically there was a high. Basically, there was a high, and then within the prices of that first wick, there was a model. You said model 3 distribution. I personally don't have a model 3 distribution creation, but do you just mean this one? Because this has supply creation right there. Let me check. Yeah, this is a valid model. You can trade this. And what was also nice is that while this got created, ETH already confirmed the other one. I am seeing a demand zone here, so I'm not sure. I need to check the lower time frame. Lower time frame is better. It was just a shitty situation because look at that break. Look how aggressive that break is right here. Making the higher lows and the higher highs right there. It looks like you have some 30-second structure, but it doesn't really matter because the break is the same candle, right? So you break that low right there. And even if you were to enter on the break, like the candle is here. So your RR is only a 1.3 towards the technical target. Now, it does have the opportunity to have follow through, obviously. But you could definitely target that entire inefficiency. See if you can just hold it based on the rejection of Bitcoin. You know, you have to realize at this point, Bitcoin is coming into key resistance. ETH already confirmed that Model 1, which adds to the probability of this playing out as well, because most of the time they're somewhat similar in sync. So yeah, if you get a high probability model, but you don't take that high, you can still take it, because I've explained many times that you have ranges within ranges, right? And you simply come into extreme supply, create a range within the range, trade that distribution, and see if you can have that rotation down. Just know the technical target is right here, but you have a lot of sell side liquidity down there as well inside the range, making for a pretty easy rotation back down. And this was again at 1 a.m. You gotta love the 1 a.m. moves. Asia market makers have been on fire. Especially 1 a.m. on a Monday open tend to be amazing pivot points. You can add that to the idea as well, right? Would you consider adding fuel to a 91k Bitcoin short on retests? I'm not really the person to add to the position on retest because I just have very refined entries with predefined risk. So if I would add on the retest, it would just ruin that average entry and also ruin the possibility of me being able to de-risk this and that. So it's not really my style or my preferred style of trading. So I wanted a distribution in here or a potential accumulation in here, and then not particularly anything in between. Now, if you come down, mitigate demand, get a slow pullback up, leaving behind reasons to go lower based off liquidity in this region, and then you come into these structure supply POIs or in here, then yeah, you can expect a lower high for a lower low and potentially go lower. But if there's another redistribution model, I'm not gonna be in it. I'm not gonna be in it. Look at XRP and Bitcoin. I did that, bro. That's what we have been doing. I was hoping for XRP to get that retest, man. Oh. I was hoping for, I was waiting for just something like this. You got some sort of a distribution model here, right? So following your structure from top to bottom today, you had lower highs and lower lows. You did SFP, the market structure, from top to bottom, right there. That is an SFP. Now, let's use the correct point right there. That isn't even SFP. This is a valid range, okay? You have your 1, you have your 2, extend range high to deviation high. You have your 3, that also SFPs that market structure high. You're building up liquidity below. Make that perfect. You always gotta line up the liquidity trail. It would have been awesome if you got market structure right there. But technically speaking, that's not valid structure. I do like the way how you take out that first market structure high. You can draw it actually into that point. Like if there was something, like if there was an entry, it would have been there. But technically speaking, it wasn't valid structure. And then look what would happen. Look at that. That's nasty. Like you gotta realize it's already a bit of a stretch. It's not the best connected range because you have just a very sharp move into that second tap. But technically, you know, you could argue, hey, it could be a 1, 2, 3 that sweeps liquidity. Mind you, it's not like there wasn't valid structure here. Okay. And then this would have happened. And then obviously if you take that high, it's such an aggressive move here that there's no re-entry. So there was no entry right there. Also no redistribution model after the breakdown. So we gotta live with that. We gotta stay patient, stay sidelined, wait for high probability models to come to you, and then act accordingly. But the ETH is definitely taking out these lows for sure. I want SOL to come to the range low to 110. I want Pepe to come lower as well, maybe even all the way down here. Like this chart just doesn't look good. And XRP had that beautiful buy-side liquidity sweep, rejected from supply that was part of that ugly PO3 with the all-time high deviation. They're just nice. It's just a nice... it's a nice price action for lower, right? Wyckoff generally has the liquidity taken at both sides before one wins the battle, but when I watch your videos, one side works well. Why is that? Am I not understanding something right? I don't know where you got the information that both liquidity on both sides should be taken typically before one side wins the battle, because that's just not true. It makes the probability of the schematic way less good. It makes the probability of it playing out way less. If you grab the liquidity on both sides of the model, well, then you can have either an accumulation or a distribution. You know what I mean? If you only grab the liquidity on one side and you understand liquidity concepts in general, where price moves either from buy side to sell side or sell side to buy side, and you only grab the liquidity in one direction, then if you get the confirmations, you can target the opposite liquidity point. Whereas if you say Wyckoff generally takes the liquidity on both sides before one wins the battle, no, that makes the schematic way less good. Because now if you have a short opportunity, but you say it has taken liquidity on both sides, where is your next target? Where is the target for the TP? Since there is no liquidity because you grabbed it. Markets move from liquidity to liquidity, and depending on the deviation on the side of the range, you have either an accumulation or distribution. And if you don't have a deviation on the opposite side, it just makes it for a better trade because you have a more obvious target. That's why I talk about a return to zone in lecture 4. Okay? That's why I talk about the return to zone. Pay attention to my setups. But you need to understand the theory behind it. Why do you say that Wyckoff, and I'm not being mad, I'm just making you think, right? I'm just making you think. It's, why would you say, where have you been taught? Because it hasn't been taught by me that Wyckoff genuinely needs to take liquidity on both sides. That's what I stand against. It can obviously happen because you can have accumulation distributions, but if you pay attention to all the setups that I post and make public, you will realize that I always do one side. Combine that with lecture 4, and your answer is right there. But I already explained the answer as well. What about STX? Is this counter context? Well, you tell me what about STX. Where do you see an entry opportunity right now on STX? I'm not seeing one. It's a very aggressive move down. Bitcoin is not showing me any signs of strength. And there's zero confirmation. It's coming down very quick. Exactly. Exactly. Where is your market structure? Well, right here I see supply creation. Right here I see supply creation. And right here is your market structure high. So this got a long way to go. Got a long way to go. But these are things you guys should know by now, right? These are things you guys should know by now. If I post a setup, and this was obviously from the Discord, you should know the dynamics behind the setup itself. I can give you the range. I can give you the probability of the range. But then if price comes down like this, you should know, oh, you have a fast move down. You have supply creation on the move down. You need to wait for this to be broken back to bullish, but that ruins the RR. So I got to watch for a refined entry, a TCT and TCT, where in the refined entry, you got to keep in mind, where is extreme demand? Where is extreme liquidity? Is that mitigated? Level 1, level 2 breakup structure, market structure pools. It's a systematic program that is literally based on nothing but rules. It's based on nothing but rules. So you have to have your checklist ready every single time. A checklist ready of like, oh, fuck, this is a fast move down. What do I need to watch for? Boom, 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 boom. You know, right? You just know. And I've done it so many times now that it should start to get imprinted in your head. You should be dreaming about it. Oh, we have a slow move down. Oh, Lars always says, the way you pull back will tell you a lot about what will happen in the future. Blah, 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 blah. It's I can talk about it for an hour right now. But it's all been explained already. I think I am genuinely, with the way that I trade, one of the most user-friendly accounts that you will find. Genuinely, I think I'm one of the most user-friendly accounts regarding with explanations on how I trade. Genuinely with how I trade. Because it's all been explained. Nothing secret goes on behind the scenes. It's all there. So you gotta put in that work, make that checklist. How beautiful can this be? Can this get more beautiful? A pump, buy side liquidity, SFP, reverse the pump. Shout out to strategic reserve. It's crazy, bro. Okay, check Litecoin. I have TA on Litecoin already ready. I'll show you in a sec. Galded, thanks, Lars. Can you pull up Bitcoin and check the range before this quick move? Was it the range that you would consider? Because I was thinking of it as one. It took the low and then broke down. It's a bit of a vague question because I don't know which range you're referring to. But the proper ranges in here were this was your individual range. That was your individual range right there. Price slowly grinded up, broke down. You had some range formation in here, but none of these ranges took the range low and then broke down. Only here did you take the low, but it was actually a valid accumulation model on the low time frame right there. Never got confirmed. Never got confirmed. But that actually completed the target of the range high. So this right here, this was a range, and this never took the low and broke down. And with taking the low, I mean like you take the low, you come back inside, and then you broke down. Like this was just an immediate breakdown, and then a slow grind up, and then just a fast move down. Boom. So just 3 ranges. You come into resistance and you break down. It's that simple. Either way, in that range itself, you should be focusing on that distribution, right? That's what I was talking about. You're at resistance, so focus on taking that high. Distribution, boom, lower. I don't understand as well. A lot of people are hyping Litecoin up a lot. Litecoin is just in the normal range. Genuinely. Litecoin is in a normal range where you had a range low, you came to your extreme liquidity, you had a beauty of a Model 1 distribution schematic, you broke down, came back, buy side liquidity, lower high, lower low, and now you can come down to sell side liquidity and demand. Simply trading the range. This is not comparable to XRP at all. Like zero. As of now, this is zero comparable. Now, other people may tell you otherwise with certain fractals, this and that. It's all about what happens in this range. It's all about what happened in the range itself on XRP. XRP had a high probability, high time frame accumulation model with multiple TCTs within TCTs. That's simply not the case here. You don't have that here. Lots of people that use fractals and compare ranges, you need to understand why XRP even had the power, okay, to squeeze up that hard. Yes, you had a compression, but where did the squeeze actually started? Right? Where did the squeeze started? Look at this. 1, 2, 3. This had TCT and TCT. This came back for extreme demand. Boom. 1, 2, 3. High probability accumulation. TCT and TCT, an extended high time frame macro accumulation model that had TCT within TCT. This is not comparable at all to Litecoin. Litecoin doesn't even have one TCT model from a similar size. This was 445 days. You had a TCT within TCT on the high time frame with a range duration of 445 days. That is why you pumped. That's the exact reason why you pumped. Okay? You don't even have a TCT model on Litecoin. This is a 2-tap model, right? So it's just hopium. Honestly, you have a beautiful distribution model. That's what you have. Now, I want to quickly check these USD JPY pairs because I was getting a pretty tough rejection on USD JPY. Not me though, but the chart. But we have GBP JPY potentially pulling back. It's a bit contradicting because the USD JPY chart, it can be bullish for sure, but it needs to confirm this candle at least a bit higher. But this already has a confirmed Model 2 accumulation. Where I'm looking to find a long on the pullback into the extreme demand right there. Similar to Euro JPY. Now, preferably, obviously, TCT within TCT, but I see a chance that USD JPY also could reverse from here. It doesn't have to, but it could, right? Because you're still SFPing that market structure high. So if you break this low, you got to be careful. You don't want to break this low. Because then you're breaking the structure from the low up, making higher lows and higher highs. While SFPing that high, expectation order flow will be lower high for a lower low. And you got these lows below, right? Oh. Which is going to ruin the idea of this playing out. Now, this is a very good looking model. Still looking to play the model, but from a context perspective, you got to be careful, right? Because on a macro context, you took that high, came into significant supply, got the rejection down, and now you're here, right? So overall thesis, and mind you, this is Forex, so it can take a long time, right? But it would be this. But I do like this. I like this model a lot. It's a very clean range. Oh. It's a very clean range. So we can pull back slowly here. We can pull back as slow as possible. Preferably something like this. That will be picture perfect. Give us that refined entry for liftoff. That'll be amazing, you know? But maybe that's a bit too much to ask for. I'm not betting on that particularly happening, but if it does, it's nice. But we're gonna see. I'm gonna watch this closely, but you need to be aware that if there's no confirmation, there's no trade, obviously. But I could see a way where this could fail, and that would be because of USD JPY dragging it down by doing something like this. If this holds, you can continue higher though, because then you got a lot of liquidity above waiting for you. But Brand Green, I hope you understand. I hope you understand why Litecoin is not comparable to XRP. It's probably because you saw someone post a chart comparing the two, because it looks somewhat similar because of a fractal. It doesn't work like that. It's the price behavior that needs to align inside the range itself. You had a 450-day accumulation with multiple accumulation models within the accumulation on XRP, allowing the market makers and giving the market makers the opportunity to fill enough longs to cause such an aggressive expansion. And you simply don't have that on Litecoin. There were some clean trades on Farcoin low time frame today. Reaccumulation into a sweep of high time frame extreme liquidity. I have Farcoin on my watch list, but I don't trade it that much. What did you say? You said reaccumulation into a sweep of high time frame extreme liquidity. I think there was no confirmation though. There was some form of an accumulation here, but there was no market structure, and there's no distribution up here though. This is not a distribution out here. This is way too steep for a distribution. But overall, you can kind of see some sort of like some signs of exhaustion where you break the high right. Where you break the high right there. It's a slight break the high right there. It's a slider break. Kind of manipulate above and then break back to bearish while building up all this liquidity. It's a nice liquidity move, right? It's you can base it off of a combination of liquidity and market structure after indeed sweeping this high in the process as well, probably mitigating some supply in the upper section that then now causes aggressive move down. But from a TCT model perspective, it's not that good, because you had a lack in proper confirmations, and here there was just no proper range. And now it's coming down fairly aggressive. What about STX? I explained STX in the beginning, but like, it's just an idea, right? If you come down this fast, that's obviously not good. Okay, take a look at CRV. What's CRV doing? Simply in a range. Simply in the range. What was that breaker again? I remember us watching it live. 3-day. Yeah. No, this was just a beautiful PO3 that just reversed. Talking about PO3s, actually. I had another level. This is truly reversing the entire thing. That's crazy. You had that PO3 and you reversed the entire PO3. That is crazy. I would just have your focus on this range, right? And trade the range for what it is. Get rid of these tabs. Focus yourself on focus yourself on this range low and see if you can get some accumulation models from there coming into this refined demand. If you surpass this demand, you're gonna take all these lows. There's nothing special here. There's nothing really protecting price from coming to this main low. And then you just fully reverse it, right? That would be crazy. That would be absolutely crazy. But talking about PO3s, we also have our big friend Ton. And I'm gonna remind you every single time, I don't know what would need to happen for the market to make this distribution play out. But, right? But it could be if we have that Bitcoin scenario that I was just discussing, right? Where you kind of come down, reaccumulate, go up, create a bigger range, distribute, come lower, something like that. It could be that on that move up when altcoins should start to outperform, not should start to outperform, but just outperform in general. It could be that this is going to be a PO3. As of now, it is completely against the context of the market. I know. But guys, I have studied PO3 closely. Rarely have I seen such high probability variables in a PO3 on such a high time frame. Like, I just haven't seen it, to be honest. It doesn't really happen like that. And it's just picture perfect. There's no confirmation, zero, because you need to sweep that low. You need to start breaking some structure back to bullish. But the way it's setting itself up right now, it could be an extremely high probability model, allowing for like almost a 200% move up. I remember looking at SUI when the rest of the market was not bearish. Okay, I remember us looking at SUI and we called that exact high right there. We did an in-depth analysis where we saw the exhaustion, we saw the PO3, we saw the distribution model, we saw the liquidity, we saw the volume decreasing. And we asked ourselves, well, the rest of the market isn't that bad right now. Can SUI go down? And what do I always talk about? It's that inverse correlation where if one of the majors look extremely bad or good, despite the rest of the market, it could actually tell you what the other pairs are doing. In this case, Bitcoin wasn't looking the worst when SUI was right there on the 10th of Jan. I don't know what happened on the 10th of Jan, actually. Yeah, matter of fact, Bitcoin was right here and could bounce, while SUI was right there and could reject. So I was like, well, I don't know what the rest of the market is going to do per se. Bitcoin wasn't looking the worst, but I knew SUI was going to come down. And eventually, it just dragged the entire market with it. Okay? Dragged the entire market with it. Now, I'm showcasing you Ton, which is, in my opinion, one of the majors. Preferably, you don't want to have that supply zone right there, right? But if this ends up being anything of a high probability accumulation model and it gets confirmed, you bet your ass I'm long. Don't care what the rest of the market does. I would rather want to lose money on a setup like that than miss out on it. Okay? So, if you can get a refined entry here, if you have a high probability TCT model, maybe even TCT within TCT, I'm talking 100 RR trades. I'm not even kidding. In a valid way. A valid way to get 100 RR trades. This range is right now 330 days. I remember me when I still had like 1,000 followers only, talking about this distribution model. I remember, I need to search it up, but I remember looking at this distribution model and thinking to myself, how on earth would this get reversed? Because it's such a high time frame model. Well, 200 plus days later, and the potential macro PO3, that's how you can reverse it. But if that happens, I do believe you just kind of, you go higher, you complete the expansion, deviate it, and then just go lower again, right? But I am looking at this, and I'm very aware of what's gonna happen in here. I'm not missing any alerts. Okay, so I just want to showcase all of you that are currently watching that put your attention on the potential high probability accumulation model in this manipulation phase, because it meets all the requirements. As of now, you kind of have a little breaker in there, actually. It's partially filled, though. What percentage risk would you take on a ton setup like that? It depends on how it presents, but not more than 2%. You have to realize a big mistake people make is, oh my god, I can have a crazy high RR setup, let me take more risk. It doesn't make any sense. It's like, oh my god, I have a good setup, I can make a lot of money on it, let me risk more money. Like, you can already make a lot of money on the setup. If the RR is like 50 to 100, which is possible in these trades, why would you want to risk more if you can make 50 RR or 100 RR in a single trade with a 1% risk, 100%? Like, you only want to risk more if the setup is a very, very, very high probability one. And this could be a very high probability one. So I would do 2%, right? If the confirmations are present. But not more than that, because the RR is already insane, right? But trust me, if we get the confirmation here, if we get the right confirmations and we are properly positioned, you bet your ass that I'll be in a live stream, publicly live streaming the results of that trade with the exchange, because that's going to be a big party. And I hope you're going to be a part of it. But yeah, that could be extremely clean. Your website is down? The website should not be down. Let me double check. No, the website is not down, bro. At least not on my end. Not on my end. Let me share. Could you guys check that link real quick? It's the link to the website, just to make sure it's not down. But it shouldn't be down. Don James, we might have to stay up for an Asia session to bro, if that entry comes during Asia, you guys gotta have to call me awake. Works for you? Okay, all good. I have no idea, Mr. Stoic. I have no idea. I'm telling you guys, you gotta spam me in the Discord server. If this entry comes during Asia, you just need to tag me like a motherfucker. I'll turn on the notifications before I go to bed. Someone's gonna get my number. You call me. You call me 1,000 times until I wake up. I'm telling you. I have waited months for this potential setup. You know? Months. If that comes during Asia, bro, we'll pull an all-nighter. We'll not sleep for 4 days. We'll sleep when we're in this setup. But the thing is, right, and I don't want to overhype a setup, because a setup is a setup and it can invalidate itself pretty easily. But I gotta admit, guys, I just haven't seen a model like this on such a high time frame. It's so insane, right? I just haven't seen it. So clean, I mean. So yeah, watch for accumulation models in here and just know that it has the opportunity to go higher. Alex, for the TON PO3 scenario, why doesn't the fact that the price action was not compressing reduced? Why for the TON PO3? Why doesn't the fact that the price action was not compressing reduce the chance it is a PO3? Only asking because she said it has all the conditions met. Well, the price action compressing is not a needed confirmation. A return to zone is the needed confirmation. And you have an amazing high time frame return to zone here, from range high all the way down to the low prior to expanding outside of the range and manipulating below. You have a beautiful liquidity curve here. It's absolutely picture perfect. If you have just a compression effect where you have the liquidity curve above and below, that's just extra nice, right? That's extra nice because when you have obvious liquidity below, it showcases that the market maker could also sweep that sell-side liquidity to fill his longs if he wanted to. But the return to zone is a requirement. The compression just makes it extra nice if you have it, but it's not the requirement. And technically, you kind of had a compression effect here because you had lows building up as well. It was just way less significant than the at the highs. But technically, you'd had lows building up as well here. But note, the return to zone, that's the requirement. You need to have that return to zone. Now, whether it is in confluence with just a return to zone on the opposite side, making it a compression range, or not, that's just extra. What's a breaker? It's not that important, especially if you're starting to understand the TCT models. It's kind of like an order block that gets invalidated, and then it becomes a breaker. It's kind of like a support into resistance flip. Other people like to mention it with liquidity, it gets hidden, this and that, but you don't really need to know it. Mr. Jamal, doesn't make sense to be an affiliate for a prop firm, they ask me. No idea what you mean, bro. No idea. So yeah, guys, be aware. Have your alerts ready there, okay? So Bitcoin is currently at the demand. Got the rejection from supply. Is at the demand. If you close below the demand, you're definitely going lower. Trade the altcoins accordingly to Bitcoin. Looks like it's not a big surprise if we get that full-on reversal on SOL. Would love for Pepe to also go lower. XRP as well. Be patient, guys. Let the high probability models come to you. Stay grinding, stay studying. Start learning how to identify these high probability models. That is where the money is made. And I'm going to try to go live tomorrow as well, but I'm going to be a bit busier. So truly take notes of everything I said in here. We discussed a lot. Lots of juicy info spilled. I highly advise all of you to also go and watch this explanation video. Okay? Go and watch this explanation video. It will tell you a lot on how to refine your entries. If you already understand the TCT models, go and watch this video. Because if you understand this, you know how to refine your entries even more for the better RR. I sent a link to it in the chat as well. And Emilio, I will also do that tonight. Okay, I'll also do that tonight. But mine is typically not through YouTube. So that's why I kind of have to check YouTube as well for a link that I can share. Okay? I appreciate you guys for tuning in. Hope you guys learned something new. I think you did because I answered a lot of questions. And for the people in the Discord, I will see all of you during the London session. Peace out, guys.